The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning, team. Hope everyone is well. Hope you're enjoying your weekend. Another very eventful week. Lots going on. Let's talk about all of that. Then let's turn our attention to what is coming up and what you need to be keeping an eye on. Global share markets, a strong week, and we saw impressive gains across the board, so the rebound has continued. In the US, the S&P 500 rallied 3.9%. That was its best weekly performance since November last year. So the S&P is now just 2% down from its record high from about a month ago, having been 8.5% below those levels about 2 weeks ago. The FTSE 100 in the UK was up 1.8%, European shares were 2.5% higher, and emerging market equities gained 2.8% last week. Japanese shares were stronger still. We saw the Topix index surge 7.9% last week. It's rebounded more than 20% over the past 2 weeks. It's still 8.6% below its record high from July last month. But at one point, a couple of weeks ago, right in the middle of all of that volatility, it was down 24% from those levels. So it has recovered a fair whack of that too. Things were pretty buoyant here in New Zealand as well. We obviously had the OCR cut, which we'll talk about shortly. That added to the positive sentiment, and the NZX 50 index enjoyed its 7th positive week out of the last 8. So it was up 4% last week. That's the strongest weekly gain we've seen in more than 4 years. We need to go all the way back to April 2020 when the market was recovering from that period of lockdowns and from COVID-19 and the big decline that we saw. During that time, we've got to go all the way back to that period to find a week that was as strong as last week. So last week was a very good one. The NZX 50 is up 10.4% from its May lows, and it's at the highest level we've seen since January 2022. Turning to interest rates, in the US, interest rates fell slightly, but not a lot. The 10-year Treasury yield finished the week at just below 3.9%. However, here in New Zealand, the moves were much bigger after that first OCR cut of this cycle, and we saw the 5-year swap rate fall from 3.8% to 3.6%, and it finished last week at the lowest level we've seen in 2 years. So while shares have got all of the attention because we've seen that nice rebound on the back of first hopes for OCR cuts and then an actual OCR cut, so the market has had a nice little move upwards, bonds and fixed income have been just quietly performing in the background too. The NZX Corporate Bond Index is up 3.3% since the end of June, and it's gained more than 5% so far this year. So don't forget about some of those conservative assets. Those sorts of returns aren't too bad for what is a very safe, steady, predictable asset class. Looking back to some of the key events from last week, and the key one was obviously that official cash rate decision, the OCR decision, and the monetary policy statement that went with it. And after holding the OCR at 5.5% since May last year, that's the highest we've seen since 2008, the Reserve Bank chose to reduce it by 0.25%. So it's now sitting at 5.25%. And they did that because we've seen a string of softer economic indicators. We had a lower inflation print, lower than expected, that is. And the RBNZ changed its stance in July and gave us a subtle but important heads up that this was coming. So markets were pricing in a fairly good chance of a cut last week. If you look at the numbers on the morning of the announcement, markets saw a 65% chance of a cut. So in fact, it would have been a bigger surprise if they hadn't cut the OCR. That would have surprised markets more. And from here on, their forecasts suggest that it will fall about another 1% over the coming 12 months, and then it will ultimately settle at around that 3% level by late 2026. And financial markets see it falling to that level as well, 3% or maybe somewhere in the high twos. Let's just call it 2.5% to 3%. That's probably sort of where it will end up. But financial markets do see it coming down much more quickly than the Reserve Bank. So it'll be interesting to see how things play out. There are 2 more Reserve Bank meetings this year. There's one in early October and there's another in late November. And financial markets expect further OCR cuts at both of those meetings. So we might end the year or go into Christmas with an OCR that's in the mid to high 4s. It'll be very interesting to monitor. But good news for investors, good news for borrowers, and hopefully it will provide a bit of a reprieve for parts of the economy that are really doing it tough and improve sentiment and confidence. So that was really the key event for last week here in New Zealand. Internationally, the most important release was US inflation, and we saw more encouraging signs on this front. So markets were heartened by the July Consumer Price Index, the CPI. It was in line with expectations, but that's good news because there was nothing in there to really spook anyone, nothing in there that was out of line with what we've come to expect and what people had been forecasting. The headline CPI, the core CPI, both up 0.2% for the month, and at an annual level, the headline rate slowed slightly, so it's back to 2.9%. That's actually the first time it's gone below 3% since March 2021, so more than 3 years ago. The core CPI running a little hotter. It's at 3.2%, but still coming down, and the lowest since about the same time, April 2021. And a day earlier, we had what they call the Producer Price Index, the PPI. That was softer too for July. So this did firm up expectations that we will get a rate cut from the Federal Reserve at their meeting, which is in about 4 weeks' time. Markets are fully pricing a 0.25% cut. So that would see them at 5.25 as well, the same as us. Some people out there see the chance for a bigger cut, 50 basis points. I'm not so sure. I think they'll just play it safe and just go in those 25 basis point increments like the Reserve Bank here in New Zealand is probably wanting to do. 50 basis points cuts, they tend to spook people. They tend to make markets and investors think, geez, what does the Fed, what does the Reserve Bank know that I don't? Should I be panicking right now? So I think they would much rather move early and just have a steady decline moving in 0.25% increments. You only really go bigger than that if you get caught by surprise and you need to take some really extreme action. So I don't actually think it would be a great thing if we saw a bigger cut than just the typical sort of 0.25% move. But anyway, that was US inflation, and it really did firm up those hopes and expectations for a Fed cut in about a month. Right, turning to the week ahead, what should you be watching out for and why? I think on the global calendar, the most important economic releases will be the flash PMIs for August. PMI stands for Purchasing Managers Index, and these are essentially activity indicators. We get them in a very timely manner. These will be for August, and we're only sort of in mid-August, mid to late August by the time they come out. So they're very up to the minute, and they do allow us to take the pulse of the global economy. So these will all be out on Thursday. We'll get the Australian one at 11 o'clock New Zealand time, late morning. The Japanese release will follow just after lunch, and on Thursday overnight you'll get PMIs for the UK, Europe, and the US. Last month, kind of a mixed bag in terms of how the third quarter of the year had started. The Australian measure was softer than expected. It fell to a 6-month low. In contrast, the Japanese PMI jumped strongly on the back of a surge in the services sector, strong activity there. Europe stalled, the UK was solid, and the US was very strong. It actually saw its composite PMI. Composite means that it covers both the manufacturing sector and the services sector, so it's kind of everything. The US composite PMI hit the highest level we've seen in 27 months, which is really interesting because we have seen some negative talk, haven't we, of late around the state of the US economy. So I think this will be the highlight in terms of economic releases, because people have relaxed a little bit since that last US jobs report. But if you think back a couple of weeks, there was a lot of nervousness about slowing activity, unemployment rising more quickly than expected. Is the US in recession or about to move into recession? I don't think it is, but it will still be really useful to take the pulse of global growth, and these PMIs will give us the first data point, the first decent and highest profile data point so far for the month of August. So that'll be interesting to watch on Thursday during the day and then overnight. On the central banking front, the highlight will be the Federal Reserve's annual symposium, which takes place in Jackson Hole in Wyoming in the US. It runs from Thursday to Saturday. Lots of economists, lots of central bankers attend this, and so you get a lot of speeches that people pay a lot of attention to. The most important one will be Fed Chair Jerome Powell, and he is speaking on Friday in the US, so that will be Saturday New Zealand time. But that will be the highlight from a central banking perspective. Here in New Zealand, a couple of things to keep an eye on. We will get the results of another dairy auction early on Wednesday morning. The last one was pretty solid. Prices rose a little more, and I think that was the second consecutive increase that we'd seen after some big falls back in July. So the headline Global Dairy Trade Index, GDT index, about 6% higher so far in 2024. So that's good news. That's nice and solid. The Kiwi dollar has moved in our favour, or in the favour of farmers, who are all exporters, and dairy prices are all priced in US dollars. So we've seen a 6% uplift in those underlying US dollar prices, and we've seen the Kiwi dollar come off about 4% this year against the greenback. So not too bad, but the agricultural sector will be hoping for another steady increase, or at least some stability, not a big fall like we saw back in July. That's early on Wednesday morning. We should also get the latest housing market report from the Real Estate Institute. And I was expecting this last week, but it didn't turn up. So apparently it is due this week, and that will be out on Tuesday. So this will cover the month of July. Last month's release reflected ongoing weakness across the market, but it'll be really interesting to see if this talk of OCR cuts that have fueled some initial declines in mortgage rates. Remember, we saw mortgage rates fall back a couple of times even before last Wednesday's move, just on the back of expectations that you would see an OCR cut sooner than previously expected, and because of declines in global interest rates. So we'd already seen mortgage rates come down a couple of times. There was a lot of talk about the OCR coming down potentially a little sooner than expected. Part of that was on the back of that Reserve Bank statement that we saw in July. So maybe you have seen sentiment improve a little bit. Maybe activity has lifted a little bit. I'm sure it's still patchy, but it would be nice to see some optimism out there, because it has been a fairly difficult period for the housing market. Other things to watch locally, not a lot on the economic front. We've got retail sales. That's always worth keeping an eye on. That will be for the June quarter. That's out on Friday. But the reporting season will really ramp up. And I recorded an episode about the reporting season, what to expect, how good will it be, what should you keep an eye on, which companies might do better or worse. So go back and take a listen to that one if you're interested in hearing more. But this week, there will be loads of corporate releases, more than usual, because we've seen less companies announce results in that sort of middle part of August. In years gone by, you would have seen a bunch of companies report results last week. Didn't really see that. It was pretty thin on the ground. You had Scalar up, I think you had Napier Port, but not many others. They've all sort of packed it into that last 2 weeks of August. So it'll be a much busier period, and the poor old analysts will be unable to sort of spread their time over 3 weeks as they usually do. It'll all be sort of crammed into 2 weeks. But anyway, for us investors and us market followers, that'll be quite exciting over this next fortnight. A2 Milk, Contact Energy, Freightways, all forthcoming on Monday. Wednesday, you've got EBOS, Fletcher Building, Sky TV. Thursday, you've got Auckland Airport, Sky City. Friday, you've got NZX, Spark, Port of Tauranga, and plenty of others in the middle as well. So a big week for local corporate results, and across the Tasman too. BlueScope, Lendlease, two of the banks, Westpac and ANZ. That's always interesting because they've got big New Zealand operations. Brambles, Cleanaway, Santos, Stockland. Got an AGM from Xero, so maybe we'll get a trading update from them. So lots and lots going on the corporate front to keep a close eye on. So a good week. Looking back last week, a very impressive one in terms of market returns. Hope you're enjoying those gains. I'm not sure that all of the volatility we saw a couple of weeks ago is behind us. You never know where markets are going next, but it is certainly encouraging to start to see interest rates come down both here in New Zealand, and we're not far away from a Fed rate cut as well. I'm sure that will come next month. So onwards and upwards. Enjoy your week, and we'll talk again soon.
For more insights, visit craigsip.com.